Welcome back. Now, South African telecom operator Cell C has listed on the Johannesburg Stock Exchange. The listing closed at R26.50 per share, valuing the business at approximately 9 billion rands with 340 million shares in issue. Cell C CEO Jorge Mendes said the listing opens a new chapter in the company's turnaround journey. Here's more detail.
Yeah, thanks very much. And it is true, this is not the first time, but what is different is this Cell C is a different version of the old Cell C. This version of Cell C, we believe, is the telco of the future. We've got a CapEx light model. We've looked at the challenges and the headwinds in the industry. It's a very CapEx intensive game. And we thought that building another beautiful base station next to existing 3 or 4 or 5 equally good base stations is not the answer. So we've partnered with 2 very good partners from a roaming perspective. Great quality of service, and effectively we're looking at making the sector healthier by investing from an OPEX point of view in those 2 partners. It effectively allows them to reinvest in their own infrastructure. And so we've swapped CapEx for OPEX. That's a fundamental difference. Pioneering a new network strategy. We also have multi-operator carrier network roaming, which allows us access to up to the 28,000 base stations. So right from the get-go, you've got a very good quality of service competing favorably with everyone in the market, which is a very different position from where we were many years ago. And then secondly, we're a customer-centric organization. We are truly a purpose-led organization. We want to make sure that our partners, we are partnering very deeply with them and genuinely. And so we've approached it with a situation that says, we're only 900 people, so we're lean, we're an agile organization. We will execute and go to market through partnerships. And if you look at our MVNO strategy, we're doing exactly that. Very strong brands, very good partners, very aligned, and it allows us access to those customer segments that otherwise we may not be able to get there with our own brand. We've revitalized our stores, a completely new look and feel in the brand. You would see taglines like "Nothing should stop you." And the truth is that's an invite to customers to say, try our network, try our service. New look and feel stores, we're up to about 70 that we've done in the last year. We've got great distribution channels, great products that have been innovative, and we've really listened to customers deeply to say, what is it that you're looking for? So we think we're well positioned for the future, and the future is one that looks at consolidation for sure, in infrastructure at least. Very lean organization that allows you to move on the front foot from there.
So you've just highlighted the investment case. They're leaner, meaner, more agile, right? That's the Cell C for the future. But I do have to ask you about the current landscape when we look at telcos at the moment, right? Big companies fighting for the SA consumer, and we know the prepaid market is quite tight. You still operate there. What's your investment case for that particular market?
Yeah, it's a great point. And if you had bad competitors, then I think you'd get complacent. We've got a very competitive sector. We've got great players in the market. They're all very good competitors. And so you have to keep sharp. You have to keep razor focused. You know, for us, we're coming off a lower subscriber base. So we've got lots of growth opportunities. If I look at what we had in the past, where perhaps our network quality wasn't as good or even on par, we now have kind of the very best of the best. That's the foundation for it. We've innovated with a number of products, so we're starting to see inroads and some growth coming through in that space. Distribution channels are different. They're fundamentally different to what we've had before. The market has shifted. You're seeing much more into, for example, smartphone penetration. That unlocks another piece of possibility in the sector. So if we look at the decline in voice in circuit switch, we're perfectly positioned. We don't have a lot of revenue in that space. So the decline in that space, we think we can manage that quite well. The growth in data is obviously coming from smartphone penetration, a great quality network, multi-operator carrier network roaming. And the Cell C brand is a household brand. So we're not starting from scratch. 24 years ago, we developed a brand that was a consumer champion, that was great for value. We lost our way a little bit, and I think we've regained that now, and we think we can get that share back. So very strong propositions, great commercial channels, a few innovative ideas that we've got. Clearly, that's our strategy, that we're not going to expose all in one shot. But we do believe that we've got a great opportunity for growth even in the prepaid segment.
And I want to talk about unlocking value and growth, particularly in the MVNO market, where you are somewhat of a market leader. Where to from here? Is there more value to be unlocked there?
Oh, absolutely. We're only at the beginning of the growth phase. This is truly disruptive. With Cell C, we are deliberate and intentional about the strategy. So when we partner very deeply. And that means proper integration, aligned strategies, making sure that we execute with precision, making sure that we're very efficient. And so the partners that we've selected have got a wonderful customer basis. They've got physical distribution, they've got digital distribution, high utility products. We've been very intentional and given great thought to the strategy of what are those ingredients that would give us the highest probability of success. We're only at the beginning of that journey. And if you've seen the numbers we've put out already in the journey to the listing of 4.7 million customers in the HLR from an MVNO perspective, and that's at the beginning of the growth spurt, I think there's a lot ahead of us and something that's very unique to Cell C.
Quickly before I let you go, outlook where to from here. You just spoke about that turnaround strategy and where you're at. Where to for Cell C now? What do we look out for?
Well, you need growth. I think, in the public space now, so you need growth in revenue, you need growth in customers, you need to manage costs. We think we've positioned ourselves very well. As I've said before, an agile organization, so quite lean, a CapEx model that we've swapped for OpEx. So we are enhancing the health of the sector by not investing in infrastructure, but paying great partners for traffic, high quality traffic. So that's quite different, and that allows us the front foot. But you will see benefits flowing through in customer satisfaction. You'll see our brand positioning is very strong. We're starting to see customer sentiment, confidence coming back into Cell C, something we haven't had before. We're bringing hope, we're bringing resilience, we're bringing inspiration, we're bringing different things to the sector, which is, like the MVNO, is a very unique positioning, and we think we're very deliberate about this and think there's lots of growth. So we are very excited about our growth engines. We got a strategy for platforms for growth, partnering. The normal KPIs will be the KPIs. You're going to need to deliver on the growth metrics, and we're in the public space, so we'll be judged on performance.
Yeah.
We're very excited that this is the beginning of the new journey for Cell C, and let's see what the future holds, but we're very excited about it.
That was Jorge Mendes, CEO of Cell C.